Hi guys, welcome to my channel. My name is Burcu, call me Blue. My channel is all about finance. I cover different topics in every video. These are all education purposes. I'm not an investment advisor. Please do your own due diligence. Thank you and enjoy the video. Thanks a lot. As a trader and previously a quant at the Wall Street, I believe that it's important to understand the entire life cycle of a stock to make better decisions while capitalizing on possible opportunities. For that, we'll cover primary and secondary equity markets in this note. As part of the primary markets, we'll cover the basic concepts like initial public offerings and follow-on offerings. In doing so, we'll talk about investment bank's role and talk about two example cases, Robinhood and TPG. As for the secondary markets, we'll briefly explain ETFs, single stock equity research processes, ownership-related topics, stock buybacks, VIX as a volatility indicator, and ESG, environmental, social, and governance. First, let's talk about the primary markets. IPOs are the process for new stock issuances, where companies go from private to public as their shares are offered to public institutional and retail investors. Follow-ons are additional stock issuances while the company's stocks are already publicly traded after the IPO. Investment banks play the underwriter role covering the due diligence, documentation, marketing, and execution of the entire process. Investment banks' trading desks may take the role to make the market to ensure smooth post-IPO pricing. For Robinhood's IPO, which took place in the end of July, the lead underwriters were Goldman Sachs and JP Chase. It started to trade under the ticker HOOD on the Nasdaq Stock Exchange. Robinhood has three classes of authorized common stock, namely Class A, Class B, and Class C. This IPO was majorly on the issuance of Class A stocks with the initial price of $38. There is lockup period for insiders, whereas they were allowed to sell 15% of their shares right after the IPO. Major revenue sources for Robinhood are the interest earned through securities lending activities and margin interest on loans. You can see from this table the numbers for securities lending and margin interest for 2019 and 2020. Aside from the regular IPOs, there are also other ways to go public. As opposed to regular IPO, some companies prefer to go public via direct listing or SPACs. Spotify and Slack are two examples which went public via direct listing, given their reputation and their capital structure, which did not require them significant additional capital. SPACs are special purpose acquisition companies, also known as blank check companies. These companies are listed on the stock exchange, and via acquiring a private company, they automatically make that acquired company public. SPACs raise capital from investors, and with that money deposited to an interest-bearing trust account, SPAC sponsors search for right targets to acquire. TPG, a prominent private equity firm, is expected to go public with the underwriters JP Chase and Goldman Sachs. TPG is considering both regular IPO and SPAC merger. Now, let's talk about the secondary markets. There are single stocks, but also there are indexes on them. However, indexes are not traded. This is why we have ETFs, exchange-traded funds. ETF is a type of investment fund that seeks to track the performance of an index by assembling a portfolio that matches the index's fund as closely as possible. Investors prefer ETFs due to their simplicity, low fees, tax efficiency, transparency, and so on. To understand the functionality of ETFs, please see my blog on ETF basics. You can find from this link. Here it is. Let's now quickly go through the single stock equity research. Equity research is a combination of fundamental, technical, and quantitative analysis where we bring together company, industry, market, and economic outlook. Equity research reports often include a kind of 360 view of the company, its financial statements, business description, client profile, revenue distribution, competitive landscape, valuation metrics, supply chain related risk, and so on. It's important to write such a report in a structured form. I'll include a post on my blog on equity research for Tesla. Please stay tuned. Now let's talk about shareholders. It's important to see the shareholder base of a company from strategy perspective. There are many reasons to understand the investor base, like to determine the dividend policy, identifying the right strategies for new offerings like timing, pricing. And it's critical to cover not only shareholders but bondholders, loan holders, convertible bondholders, and so on. Note that we can find the ownership details not only on the institution level but also on the fund level. Like for instance, BlackRock as the institution and iShares Core S&P 500 Index ETF as the fund. You can see from this table both of them. Another important item to highlight is the insider activity, as to whether the officers and the directors of the company are buying or selling the stocks of the company. That is something important to keep in mind, as it can potentially give signal about the company's situation and its potential growth depending on how usual or unusual the activities are. Activist investing is also another key topic to cover. It's important to screen companies which are targets of activists. This can be useful while investing in companies and prospecting companies from corporate actions perspective. Most famous activist investors are Carly Khan and Bill Ackman. I a little bit explained them in my prior blog regarding investment banking, but we'll have a separate post on activist investors. Another topic to cover is the stock buybacks. In the recent years, stock buybacks have become so common, and there are different opposite views about that. Some think that buybacks are useful for the shareholders and the economy, while others think otherwise. Why share buybacks have become so popular? Main driver is the low cost of funding via the bond market, which allow companies access funding at low cost so that they can go ahead and buy back their shares. Companies may also prefer share buybacks because it's kind of a signal to the public that their stock is undervalued. What about volatility? VIX is an important volatility indicator implied from the options on S&P 500. We'll cover this topic in a separate blog post and a separate video. VIX is so important when it comes to equity markets. We'll come back to that. Finally, ESG investing is highly important. Investors give significant attention to the ESG aspect of their investments. There are ETFs which are ESG focused. There are companies which we can screen based on their ESG performance. There are limited data around ESG, but thanks to reports like Global Reporting Initiative and Principles for Responsible Investment and some third-party vendors' efforts, which do extensive research to generate scores and ratings, we can find some data around that. An important topic around ESG is the greenwashing, for which Deutsche Bank's name came into play recently. These are just the basics of related topics around equities. We'll cover each of these topics in depth later. Thanks a lot. Hasta la próxima.